Hi, I'm Beat Nussbaum from macrobeat.co.uk. Today from the sunny Kent, and there are quite a few things we would like to talk about. So obviously we have like three key stories for the week. The main one, the dominating one, being the US-China trade war escalation. We had actually the UK politics on the radar as well. And there we just had new news this morning with the Premier May announcing a resignation for June 7. So that chapter is gonna get a lot more interesting soon. And then we have the EU Parliament election. In terms of the US-China trade war, it seems this week the penny has finally dropped in a market where people started to understand this is not just about the US and China. With all the bans around the Huawei story that starts to include countries like Japan, Korea and Europe, the trade war has suddenly gone global, and that has obviously had its impact on the risk side. We look at the first chart, which is the Dow Jones. Here we continue to flip around this 76.4 Fibonacci area at 25,716. This is really very normal. That's a sort of Fibonacci area that will be tested to find out if the trend is still strong for the upside or actually if the trend is over. Personally, I still think the trend overall is over. The Dow is in a topping process, and I would expect a serious test of the 25,200 area or the next Fibo area 24,950 in the next sort of week or two. So I continue to be negative on stocks. I still think the entire process is a topping out process. On the next chart, we see oil. Oil had a really horrible move. We sort of tried to break the 63.70 area, the Fibonacci area I pointed out in the last few weeks, all on the back of the US tension with Iran. But as that seems to have eased off, and we got some inventory data during the week where we've seen a strong build on the inventory side, suddenly left the market very long of oil with very little to go at. And at the same time, with the escalation on the trade war and the worries around global growth, is obviously another bearish reason for oil. So we have seen a very strong sell-off, 10% sell-off really in the last few days from the peak. And even this morning it continues. It's been recovering a little bit, but still rather looking shaky. I think we could get back to this 59.60 area, but overall oil will remain rather depressed. On the next slide, we take a look at the 30-year yields. Here we had a dramatic move in the last few weeks. Obviously the main driver being the negativity around the trade talks or the escalation of the trade war. At the same time, shaky stock market. So yields have collapsed. And what didn't help was very weak US manufacturer PMIs yesterday. They're hitting a 3-year low, which really makes the market worry whether or not finally the slowdown in the global growth, together with the escalation on the China-US trade war, is finally hitting home, where the US data starts to weaken. On the next chart, we look at dollar yen. This one we see has been under pressure, obviously, on a risk sense. We had a brief bounce from the previous lows, but it took us only a day or two to almost go back to the lows. So this 109.50 area is going to be the absolute key for the next week or two. With the increased tension on the trade war, we could really see an acceleration of the dollar on the downside. Add weaker US data and weaker yields together, this could really get follow through on the downside. The last chart for today is a dollar Korea chart. The reason I wanted to show this one, this just really is a window into what's going on in Asia on the back of the escalation on the trade war, where we see Asian currencies weakening dramatically. This is just one of them. I could show you a few more. This is, again, as well on the backdrop of weaker data in Korea as well. So the whole world is really holding its breath on how this China-US situation continues. So on that note, I think we have to watch continuously on how the story between the US and China continues. I think maybe now after the shots were fired, there might be a little bit quiet time ahead of the G20 end of June before we then see whether we have a further escalation or not. This is it from me, Beat Nussbaumer. Thank you very much. Bye-bye.